What does Warren Buffett's retirement mean for the stock market? Warren Buffett is officially stepping down, and it's not just the end of an era, it might be the start of market-wide chaos. He's been called the Oracle of Omaha, the GOAT of investing, the man who could move markets with a single sentence. And now, after more than 60 years at the helm, Warren Buffett has confirmed he's retiring as CEO of Berkshire Hathaway at the end of 2025. So what happens next? Will investors bail? Will Berkshire tank? Or is this part of a bigger plan that's already in motion? In this video, we're unpacking what Buffett's retirement actually means for the stock market, the risks no one is talking about, and how this transition could impact your portfolio more than you think. All right, let's get into it. First, let's talk about why Warren Buffett matters so much in the first place. Warren Buffett isn't just a CEO, he's a legend, a walking institution, a man whose every word can move billions of dollars in a single sentence. When he buys a stock, Wall Street listens. When he speaks at Berkshire's annual meeting, it's like the Super Bowl of investing. Here's what makes him so influential. He turned Berkshire Hathaway, originally a failing textile company, into a $900+ billion investment behemoth. He consistently outperformed the S&P 500 over the last 60 years. He owns massive stakes in Apple, Coca-Cola, Bank of America, and American Express. And unlike many hedge fund managers, he plays the long game. He invests based on value, not hype. Buffett's approach has taught millions how to invest wisely. But now, with retirement almost certain, people are wondering, what happens when the coach leaves the game? Now let's talk about the man taking over, Greg Abel. Greg isn't new to Berkshire. He's been there for over 20 years. Most recently, he was vice chairman overseeing all non-insurance businesses, including railroads, utilities, and manufacturing. Here's what we know about him. He turned Berkshire Hathaway Energy into a $100+ billion enterprise. He's low-key, detail-oriented, and deeply aligned with Buffett's long-term value approach. Buffett has said publicly, Greg understands Berkshire. He understands capital allocation. He's ready. So if you're worried that Berkshire is handing the keys to some random MBA, relax. Abel's been training for this role for over a decade. But that still begs the question, will Wall Street trust him the way it trusts Buffett? Now here's where things get juicy. Let's break down the potential ripple effects across the market. The stock market loves certainty, and Warren Buffett, as old as he is, has been a symbol of certainty. The moment news drops that he's officially stepping down, or worse, passes away, we're likely to see a short-term emotional reaction in the markets. Berkshire Hathaway shares could dip, not necessarily because of fundamentals, but because of fear and uncertainty. Investors who've been riding with Buffett for decades might cash out, thinking the glory days are over. This kind of reaction is usually temporary, but it could be volatile. Think of it like when Steve Jobs passed away, Apple shares dropped, even though Tim Cook turned out to be an excellent leader. Warren Buffett is basically the mascot of value investing. His departure could mark a psychological turning point for a lot of old-school investors. Some may say value investing is dead, and lean even harder into tech and speculative plays. Others may worry that the market is entering a new era, one with less discipline and more chaos. Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." Well, this could be a moment of both. Berkshire Hathaway itself is one of the largest companies in the world. It holds stakes in dozens of major firms. So if Berkshire shakes, it could send ripples across multiple sectors. Apple, which makes up over 40% of Berkshire's portfolio, could feel pressure if Berkshire decides to change its position. Banking stocks like Bank of America and American Express might also wobble depending on how the new leadership rebalances the portfolio. That's why Wall Street is paying very close attention to Greg Abel, because whatever he decides to do post-Buffett will influence trillions in capital flow. Here's the real challenge. Buffett's genius can't be cloned. Even though there's a plan in place, replacing Warren Buffett is like trying to replace Michael Jordan on the Bulls. The team can still play, sure, but the magic, the aura, the once-in-a-generation instincts, that's not in a handbook. Buffett made big moves during scary times. In 2008, while banks were collapsing, he invested $5 billion into Goldman Sachs. In the early 1990s, he picked up shares of Coca-Cola and never looked back. In 2011, when people were doubting America, he publicly bet on the country's recovery. Greg Abel is smart, but does he have that same killer instinct, that same stomach for risk? This is the crossroads Berkshire, and really the entire investing world, is standing at. Let's explore this even deeper, because there's a chance that Warren Buffett's retirement might actually be a good thing. Buffett didn't just build a portfolio, he built an investing machine. Berkshire has over 60 subsidiaries across industries like insurance, energy, railroads, and food. It's got a cash war chest of over $150 billion, giving it tons of flexibility. The structure of Berkshire is designed to be decentralized, meaning businesses run themselves without needing day-to-day micromanagement. In other words, Berkshire is shock-proof. It was designed to outlast Buffett. That was always the plan. Let's not forget, Buffett handpicked Greg Abel for a reason. He's been running Berkshire Hathaway Energy for 20-plus years, turning it into a $100 billion business. He understands long-term strategy and capital allocation, the two things Buffett values most. Plus, he has Buffett's trust, which says a lot. Wall Street analysts who've worked with Abel say he's sharp, cool under pressure, and unlikely to suddenly change Berkshire's DNA. So while Abel may not be Buffett, he doesn't need to be. He just needs to stay true to the philosophy, value, patience, and discipline. Investors aren't dumb. Buffett's age isn't exactly a secret. Wall Street has been preparing for this moment for years. The stock price of Berkshire hasn't spiked or dropped based on Buffett's health. Analysts from J.P. Morgan and Goldman Sachs have already built succession into their forecasts. Many long-term shareholders say they'll stick with Berkshire no matter what, because the model works. So while the headlines will scream, "Buffett retires," the market reaction may be more muted than people expect. Here's the big takeaway, and it might surprise you. Buffett's retirement isn't the end of Berkshire. It's the test of everything he's built. For decades, he's said that he designed the company to be decentralized, resilient, and self-sufficient, that the system matters more than the man. Now we get to see if that's true. This moment, right now, is like Berkshire's graduation day. The student has to walk without the teacher. It's scary, yes, but it's also proof of how much trust Buffett has in his team, his philosophy, and the legacy he's leaving behind. So what does Warren Buffett's retirement mean for the stock market? Let's break it down. It marks the official close of one of the most iconic investing careers in history. It may cause short-term volatility, emotional reactions, and portfolio shifts. It will test investor confidence in Berkshire's future and in value investing as a whole. But it also opens a new chapter, one where Buffett's philosophy gets to live and breathe without him. Berkshire Hathaway isn't just Warren Buffett. It's a machine built over decades, run by people who've been trained by the best. Buffett stepping down is the ultimate trust fall, and he clearly believes Berkshire will stick the landing. Watch the next video to see what Buffett's successor, Greg Abel, is planning to buy next.